Good morning. Today is Thursday, December 27. The time right now is 9:12 in the morning. Overnight market continue to edge higher in equity markets in the States, although volume has been very, very thin. So again, in the Dow Jones Cash Index, we have a new marginal high, what we call that the record high at 37,683.7 in the cash index. So we can see that market continue to edge higher, even though it is on thin volume. And the thin volume is a concern for me because it means that the market is not very well supported and is vulnerable to sharp pullbacks. And do be aware that we are into the dying days of 2023. Volume will continue to shrink as we go into the year end, in fact, going into this Friday's trading. So be very, very aware of the idea that market is very, very thin right now. So in the S&P 500, we see a slight improvement in the S&P 500 cash index. We have a marginal high for the year, at 4,785.39, and this is just 0.1% away from the all-time high traded on January the 4th at 4,818.62 in the cash index. Again, the Dow Jones has yet to breach into all-time high, unlike the S&P 500, unlike the Dow Jones and the Nasdaq 100. So be aware of that as well. And in the Nasdaq 100, we continue to see market trading into new marginal high at 16,922.01 in the cash index. And this is just above the all-time high traded on November 22nd, 2021, which was at 16,764.86. I'll be very interested to see how this market closes by the end of Friday's trading. And if it closes below the November high of 2021, that could be giving me the first inkling that maybe perhaps the market is getting ready to take profit. So be very, very careful going forward to buy at this current level. And over in Asia, we can see the Nikkei has pulled back from yesterday's high of 33,690, which was actually not that far away from most recent high traded last week at 33,750. And this pullback is suggesting that the market is beginning to book their profits from the rise of 32,090 in the futures contract traded in Osaka. Over in Hong Kong, we also see a bit of a window dressing going on. We can see that the market has bounced off recent low, this week low at 16,276, and this may actually see prices continue to edge higher, perhaps to close even above the October-November close at above 17,100, perhaps into the 17,369 to 17,480 levels, which is going to be a key levels in my opinion, and that will be suggesting that the market will be vulnerable to the downside if and when they trade into these levels. And over in the dollar itself, you can see dollar index continue to slide, and I think yesterday's trading activity has been mostly focused on currency. We can see the dollar index has traded to the year low at 100.5, and this is even lower than last year's October low. So this is definitely putting the dollar on the back foot with the possibility that a low is probably very nearby now. So do continue to be very cautious chasing this market ever lower. And over in the euro dollar, we see a corresponding rise to a new high for the year at 111.23 overnight. And again, if we take the dollar index as a guide, we can see that there's a possibility that the market is almost nearing an important peak for now, at least in the short term. Over in sterling, we can see sterling managed to edge higher to 128, above 128 to a high of 128.02, and this is marginally higher than the previous high at 127.94. And this is actually putting a positive spin on the upside bias in the sterling. And over the dollar yen, as the dollar index continues to slide, we can see dollar yen also pull back to a low of 141.17 this morning, and this is not far away from the year low at 140.95. I would say the year low. I would say this is the month low at 140.95. So be aware that this is possibly where the market is heading, possibly below the 140 levels going forward. And over in the dollar Canadian, we also saw very much the same movements as per the dollar index. We can see the dollar versus Canadian dollars is trading at 131.77, which is the lowest so far this year. And Then over in precious metal market, we can see a little bit of a bump up in precious metal prices in terms of gold. Gold traded to a high of just under $2,085 to a high of $2,084.50, and which equals to an area which is going to be very crucial, technically speaking. If the market cannot sustain above $2,090 and $91 for that matter, there is open up the possibility that we will see some kind of profit taking to resume its slide from the high of $2,148.99. Over in the spot silver market, we can see the market has actually bounced off an area which I've highlighted in previous updates. The area between $23.93 to $24.10 do appear to have some kind of support, and the rebound from the low of $23.94 suggests that the market right now may have found a temporary bottom, and this could be a base for market to propel ever higher. And let's see whether it can do what I've been talking about, closing above the November close at $25.18. And over in the oil market, we can see oil managed to pull back on the back that the Red Sea is right now appears to be navigable again, because you can see that major shipping lines are beginning to pile along this line again, because previously we knew that the Houthis rebels based in Yemen has been targeting commercial vessels as well as tankers traveling in the Red Sea from the Suez Canal. So they have rerouted to actually sail through the Horn of Africa, which is a much longer route to Europe. So we can see that has actually caused the price of gold to price of crude oil to actually fall back almost 2%. So we can see that the market is right now in the corrective phase. But I think by and large, it is still positive. I think there's a good chance the market will try the $79.50 at some point in time, perhaps into the early part of next year. And over in Bitcoin, we can see Bitcoin actually took have actually benefited from a lift as news of MicroStrategy actually bought northward of $615 million in Bitcoin overnight, and that is in cash. So that in the midst of lack of any kind of driver in the markets, it's actually lifted the Bitcoin prices to a high this morning at 43,814 so far. But we can see the prices are beginning to see the highs are getting lower and the lows are getting higher, suggesting markets in a consolidation phase with a bias to the upside. I think the bias to the upside may target 48,000 over time, but this is of course based on the likelihood of an early approval of the spot BTC ETF license by the Security Exchange Commission or the SEC as early as next month. Two dates has actually pop up. One is January the 10th, the other one January the 12th. So that's not very far away. We are probably looking at about 3 weeks from now to see a possible approval by the SEC. So we can see the market is actually quite positive, looking forward to an early approval. But be very, very careful of the buy the rumor, sell the fact strategy, because if the whole world is long, which data from the Chicago Mercantile Exchange as far as Bitcoin futures are concerned shows that there's a large inflows of large institutional holding long position. So if the large institutions are holding a long position, we have to ask ourselves who is selling, because for every one long position, there must be a corresponding short position. So be very aware that there's a possibility of buying the rumor, selling the fact. And if the market ever surge to as high as $48,000, it becomes vulnerable to that to this strategy. So be very, very aware of sharp reversal once the market surge upon the news of an approval by the SEC. So this is all I have for you for today. In the meantime, you take care, and I'll come back to you tomorrow with further updates. Bye-bye. Take care.